Hello traders, it's your boy Gift Ubakwe, and I am beginning a new series where I'm going to call this weekly trade recaps or weekly trade recap, however the pronunciation goes. All right, so what I want to do in this series is to show you the trades I've taken from the week and how I managed to trade, my results from those trades, just to help me keep tabs of my analysis. So I'll do a weekly breakdown of my charts, show you the trades I'm looking to take for the week, and then at the end of that week I'm going to do a breakdown or a recap of the trades I took, showing you if they played out or if they didn't play out or something. All right, so let me know if this is the kind of video you would appreciate on this channel, so that way you get to see how well my analysis play out, and the weeks I have losses, of course I'll still go ahead and show you the results. What matters here is transparency, because I really hope that this little videos I'm doing, uploading every now and then, is going to encourage someone to see that this is possible, and also help them begin their journey or keep going on the journey. All right, enough of all my plenty talks, and let's get into this video. All right, let's go into this video. So I'll show you the 5 trades. Let me just take you first to my what's that called, my trading journal, and show you the 5 trades I took. So if you watched my most recent videos, you must have seen my journal. All right, but I just want to go a bit more in details on the journal and show you exactly what I did for this week. So the week started on the 21st of November and ended on the 25th of November. So I took 5 trades, 1 2 3 4 5 trades in total. So I want to show you exactly those trades, what my idea or bias was when I took those trades, and how they all played out. Of course, you can see from the screen that I won 2 of those trades, I lost 1, and I had 2 losses. So you could say my winning rate was 50% in the past week, which is not bad. All right, which is not bad. I've had worse. I've had a 100% losing streak in a week. All right, but it's fine. That's not what I'm here to talk about today. So let's go to the first trade. I want this video to be as short as possible. So the first chart is going to be card CHF. Let's look at the trade I took. But before we do that, let me show you the before and the after picture, so that way you have a clear idea of what this trade is all about before I go to the chart to show you that. Okay, let's quickly look at the before and after picture, because that's one thing I've learned to do, which has really been very helpful, as it gives me a clear idea. So this was the idea I saw that made me go into the trade. So you can see there was an ascending channel, more like a flag pattern. Now I had this bias that this might not have completed, but all the same this looked too good for me not to try to get in. All right, so I went in here, the trade went down, I went to start break even, and it took me out. So let's go to the chart and let's see how that played out. Okay, let's go to the chart now and look at CAT CHF. So here we are on CAT CHF. Let's start from the daily time frame, as I normally would always analyze my charts. All right, so this was the bias on the daily time frame. I can see the price was coming from this overall ascending channel, this correction. All right, all of these correction needed or only tells us one thing, that there's going to be a massive move to the downside, at least to this 90% axis right there. All right, but now it's left to us to catch this move as it begins. So I've seen this. The next thing is to look for the latest, the most recent impulse. All right, so if you agree with me, if I move this down a bit, if you agree with me, you would see that we had an impulse here. After that impulse, we had a correction. All right, after that correction, we had another minor impulse. After that, we had this correction, and after this correction, guess what, we had an impulse. I've always told you guys that price will only move in impulse and corrective moves. If it's not an impulsive move, it's in a correction move or corrective move. All right, now after this move to the downside, guess what, this was the next move. This move happened 2 weeks ago. After this correction, this move happened 2 weeks ago, but I missed it. I actually missed that move, but it's fine. We are looking at this now. So we saw this impulse, this impulsive move, this correction, and now that followed by another impulsive move to the downside. Now, what was my bias as at last week? So this was 9th of November. If I go to the 4-hour time frame, you're going to appreciate this even more better. All right, on the 4-hour time frame, what we have here, we can appreciate this. So I saw this was supposed to be, a decent trade. I'm not even sure what happened, why I missed this trade, because I saw this trade playing out to at least this point, but I missed it, which is fine. It happens in the forex market. So after this move, I knew I didn't want to miss this other move. All right, I knew I didn't want to miss that other move. So how did I position myself? Which is what takes me to the 1-hour time frame. So what we do is look for the latest impulse. All right, look for the latest. Let me even do this accordingly so I don't lose some of you. Look for the latest impulse on the daily time frame. Once you have found the latest impulse on the daily time frame, the next thing is to go to the smaller time frame, which for me begins from 4 hours. So on the 4-hour time frame, you want to also see what the price is doing. Preferably you want to see how the correction is shaping up. In this case, we see that the correction is almost completed here. The next thing is to go to an even smaller time frame, which in this case was the 1 hour. So on the 1-hour time frame, what did I see? I saw that the price was almost completing this correction. So I anticipated two things. After this correction up here, I didn't get into this because I felt like price has not really told me it's ready to commit. All right, so I waited for this other impulse to the downside. The moment this impulse happened and I started seeing this correction, I knew this was time for me to get in. So I got into this trade at the top of the correction, after this impulse. What was my thinking here? I saw this candlestick pattern, all right, that told me that the upward move is more like exhausted, because this was what's it called now? See, honestly guys, I don't really know the names of all these candles, and I don't really care about the names. I just know what they are doing and what they represent. Okay, so forgive me, is it shooting star, be rising star, or morning star? There is though a name for it, but I can't remember the name, and for me the names doesn't really matter. What matters is know what it represents and position yourself to get in. Okay. All right, so that was what I did. I set my sell stop entry right there below that candle, and price took me in. Now the moment price moved, so what I do is if price moves up to 30 pips, I move my stop loss to break even. All right, so in this case price moved up to 33 pips and I moved my stop loss to break even, and price reversed and took me out for break even. Perfect, because at this point I was expecting price to come for one more push up there to complete a third touch before it impulses down and gives another correction for another entry. So this was my thinking, but of course that didn't happen. So that was my first trade, and that trade ended in a break even, which was not bad. Okay, now let's go to my second trade for the week. All right, my second trade for the week was, let's see, what pair was that? My second trade for the week was on USD CHF. So let's go back to, or better still, let's look at my before picture, and then we can take a look at the after. All right, so this is the before picture. What was I looking at when I took this trade? What was in my mind when I took this trade? Okay, let's wait for this to load. Awesome. So this was, I probably didn't take this before picture early enough, so I guess this means I only took, let me confirm, because when that happens, when I'm not around the chart, when it plays out, I will end up taking just one picture, Let's see if that's okay. That's what happened here. So I took just one picture when I came and saw the price has moved. But let's go to the chart and see what I was looking at before I got into that trade. So that would be USD CHF. Let's see this on the daily time frame and work our way down. Okay, now price always moves in impulse and correction. The truth is, if you're able to position yourself, you would catch massive moves and make lots of money. I'm still trying to hone my discipline, because that's where the problem lies, not the strategy. Guys, don't let anyone deceive you. It's not all about the strategy. It's about your emotions, your psychology. Are you able to watch trades play out even when you see retracements? Now this for me was, in fact, I started seeing this move from up here, even though I missed it. Started seeing this move from up there. I was expecting a sell on this pair. Now, why was I expecting a sell? Simple. I saw that price came from this impulsive move. So there was this impulsive move. Afterwards, another impulsive move upward, another impulsive move downward. So price didn't really correct. All right, from impulse to impulse to impulse, from the first impulse, second impulse, third impulse, price didn't really correct. So when I saw price going in the form of this ascending channel, I knew that price was likely going to sell. All right, so this was the first thing I looked at. I saw this ascending channel. Now before this impulsive move happened, let's go to the 4-hour time frame. And then from once you see what the market is doing from the daily time frame, the next thing you want to do is to go to the smaller time frame and look for at least 3 to 4 confluences, or between 2 to 4 confluences. The more the confluence you see, the more probability, or the more probable that the trade is going to play out. So in this case, I already saw a higher time frame ascending channel. All right, a higher time frame ascending channel, a higher time frame double top, you can see. All right, so this was a higher time frame double top right there, so which was also confirming the move to the downside. Now if we go to the 1 hour, you also see another confirmation that was there. So on the 1 hour, we see a 1 hour double top, a 1 hour double top. So this was also a perfect confirmation. At this point, I was hoping and waiting for, let me do this. At this point, I was waiting for the chart, or for the trade to correct right there. All right, I'm not sure what happened, why I didn't take this trade. I'm not sure why I didn't take that trade, but I'm sure I took others here that I closed for break even. I took one trade here that closed in break even. I probably was not around my chart when this happened. All right, so but that's not what we are looking at, because I missed those trades. So now we've seen that this is the impulsive leg we are looking at. So imagine I got into this trade, I would have made all of this profit. Maybe not all, because most times holding the trades can be very emotional. You can get emotional and close the trades before it plays out. But yeah, you get the drill. The point here is there was this move, this impulsive move from the upside downwards. Now after that impulsive move, I saw this correction. All right, I knew price was coming from a higher time frame ascending channel, higher time frame double top, so I knew I needed to position to catch this move. Let's zoom in a bit and see exactly what happened right here. All right, so when I zoomed in, guess what? I saw that the price was forming a correction, an ascending channel after the impulsive move from the upside. So that was a confirmation that price was probably ready to drop. And after the ascending channel, guess what? On the smaller time frame, I saw a mini ascending channel right there. All right, a mini ascending channel that gave us a double top, because it broke this former high. All right, this previous high, it broke it, and then it broke it in a corrective manner. It didn't break it rather impulsively. It broke it in a corrective manner. So that was the pointer that price was probably going to drop. Now what was I waiting for? All right, so the first confluence in the lower time frame was an ascending channel 1. The second confluence was a double top. Did I just say confluence? Conference. All right, second confluence was a double top right there, which makes it 2 confluences. Now the third confluence was, I saw an impulsive move to the downside and a correction, which is always my preferred entry. So that was the third confluence. You can add this mini ascending channel as the 4th confluence if you choose to, but 3 confluences for me is perfect to take a trade. So I put my sell stop entry there and it triggered me in. I feel like I probably didn't manage this trade properly. I feel like I probably didn't manage this trade properly. English language. I didn't manage this trade properly, because I would have banked in more profits from this trade. So I ended up closing this trade for a 1% profit. But imagine I managed this trade properly, I would have closed for 3.6% thereabouts. Okay, so still working on my management, but that was my second trade. I had 4 confluences or 3 confluences on this trade. That was why I took the trade. Not a bad trade. So yes, let's go back to my journal and see what did I even write there. I say good trade. Let's see, good trade. I like the way, I think this is supposed to be the way. I think I was going to say I like the way I managed the trade. Maybe I could have, let's see, maybe I could have been a little less aggressive with moving my stop loss, because price moved over 4% after I closed for 1%. See, so that was what I noted down. So next time I'll probably try to be more or less aggressive. Now, which was let's go to my big winner, or the biggest winner, USD JPY. Let's look at USD JPY. I think there's no point showing you before and after. Let's just go straight for time's sake, as I'm trying to make this video as short as possible. All right, so if we look at USD JPY, what was I seeing? My bias was pretty simple. Let's go to the daily time frame. So on the daily time frame, the most recent impulsive move was this. This was the most recent impulsive move. All right, I also missed that trade. I guess I just needed the market to do something more convincing, and so I missed that trade in the course of waiting for the market to do something more convincing. I already had a bias that this was an ascending channel that was going to drop, but I wasn't well positioned to catch that. So once I saw this, I knew that the move was going to probably happen after this impulsive move. There's going to be a correction. So if we go to the 4-hour time frame, so I've seen the impulsive move on the daily chart. What I come to do on this 4-hour time frame now is to wait for a correction. And guess what? I saw this correction. Okay, so this is where I now start saying, how many conferences do I have to take this trade? So I look for at least, or between 2 to 4 conferences. The more conferences, the better the probability that the trade is going to play out. So what were my conferences on this trade? The first conference was a double top. So I saw a double top right there on the 1-hour time frame, which was the first conference. The second conference was an ascending channel. So price went up in a corrective manner, forming an ascending channel. So this was my second confluence. So my third confluence would be an impulse and a correction. And guess what? Price gave me an impulsive move to the downside and gave me this correction. All right, so the moment I saw this correction, I knew it was time to start looking for a sell. But guess what? Price even made it even sweeter by giving me a fourth confluence on this trade, a fourth confluence. So if I go to the 15-minute chart, you're going to appreciate the fourth confluence even better. Give me a sec, let me zoom in and show you. All right, so this is the fourth confluence. So I saw this impulsive move, all right, in a smaller time frame. You could see this to be, a correction, all right, and then there was an impulsive move. After the impulsive move, I expected a correction to happen. Okay, now this correction broke out of the ascending channel, the overall ascending channel on the smaller time frame. That correction broke out of that, and what was I looking for? I now saw a smaller time frame ascending channel on the 15 minutes. Voila, that was it. So I set my sell stop entry below the ascending channel, set it below, and then it was for 30 pips, and price triggered me in and started going in my direction. I managed this trade as much as I could, but I made a silly mistake. So this was supposed to be, I remember in the last video I stated something about a mistake, if that was the video. Yeah, I think so. This was supposed to be my scaling entry, but this entry happened late at night around 8 a.m. and I've told myself that I didn't want to start taking trades at about that time, 8 p.m. rather. I didn't want to take trades because it was pretty late. All right, I didn't want to take trades. Am I correct? Was it 8 p.m.? 8 p.m. yeah. So I didn't want to take trades because I told myself not to take trades at that point. But guess what? Greed came into the picture. Did I get that timing correctly? Was that 8 p.m.? Let me see. Or was that? Yep, I think it was 8 p.m. That's 20, yeah? So at this point, price did what it wanted to do, went up. I missed that entry because it was late. I didn't take it. And in the morning, guess what? I became greedy. I entered 2 trades down here. With high lot sizes. I was risking 1%, and then price reversed against me. All right, I was risking, the loss size was just too high. So the moment price reversed against me to this point, I closed the trade because I was already losing money on these reversals. All right, so if I had managed this trade properly, following my management strategy, I would have taken another entry here. But I think I was also following my plan because I told myself not to take trades once it's past 6 p.m. All right, so yeah, this would have been my management, and I'd have probably closed this trade right there for a 4%, and the initial one would have also been closing profit. But it's all good. I still banked 7.5% on this trade, which was not a bad one at all. Pretty good trade. And now I still see price consolidating upward for another move to the downside. Okay, now that was my trade for USD JPY. Finally, on NZD JPY, I lost this trade on NZD JPY. I think I lost 2 trades. Let's see which of them did I lose first. CAD CHF. So let's look at CAD CHF first before NZD JPY. Okay, so I follow things orderly. So CAD CHF, I took a loss on this trade. From this correction up here, I'm not even going to spend time on this. From this correction, I knew price was probably still going to keep going down. So I got into this trade. Now my bias was price didn't complete this move. It didn't give me a 3 touch right here. All right, so I didn't see a 3 touch before price started coming down. So I expected that also right here price won't also complete a 3rd touch and it will start going down, but that was not the case. I was wrong, so price took me out for a loss. All right, so this was exactly how the trade was positioned when I took it, something like so. I would adjust this like that, and then this was also adjusted like so. So I saw this, and then don't forget, at that point when I saw this felt like, okay, this was a good trade because I saw this rejection up here. So I felt, okay, set your entry. It was even low enough. Price triggered me in, never got to a 30 pips, all right, to allow me move my stop loss. Price never moved up to 30 pips. 30 pips would have been somewhere around here, so price never got there, and then I couldn't move my stop loss because I entered this trade for 20 pips, and then price took me out. So this was the first loss. Right now I see price has evolved, so the price has evolved, and hence why I adjusted this. This is still looking like it's going to sell. It's just an evolved structure. So now I'm looking at this like so. All right, so price has broken out of this. Price is probably going to form correction like this for another down move for next week, something like so. All right, so that's what I'm looking at for next week. Now this takes me to the final trade I took, which was on NZD JPY. So similar bias because JPY pairs are dropping massively, so I expected that this would drop. Now if I take you to the daily chart, you would see exactly why I expected for this to drop. On the daily chart, what do we have here? So on the daily chart, we have this impulsive move to the downside. All right, after that impulsive move, we had this correction, but price didn't continue to the downside. Instead, price broke out with an impulsive move to the upside, and after the impulsive move to the upside, I saw this correction, an ascending channel, which is obviously a reversal pattern. If I go to the 4-hour, you will see that after the ascending channel, there was another impulsive move to the downside, and after that I saw this correction. So this tells me that, okay, price is probably correcting for another down move to at least this point. That was the bias. Okay, and what was my lower time frame confirmation? If you go to the 4 hours, you can already see this from the 4 hours rather. If you go to the 1 hour, you would see that I have a double top right here, which is the first confirmation. All right, double top is the first confirmation or confluence. The second confluence would be an ascending channel right here. All right, that's my second confluence. My third confluence would be an impulse and a correction. So in this case, there are 4 confluences that informed the reason why I took this trade, but it didn't play out, which is fine. It didn't play out. So this was my entry at the time. I saw this correction like so, 1, 2, 3 touches. felt like this is good. All right, so 1 2 3 touches right there. Felt like, okay, let's do this. So I set my entry below this candle. All right, below this candle, this red candle, set my entry below that, hoping when it triggers me in, of course, price will go down. And don't forget, my management rule tells me that if price moves up to 30 pips, which in this case would have been 1-to-1, I will move my stop loss to break even, like so. But that didn't happen. Price didn't move to 30 pips, so it took me out, all right, for a loss. And now I feel this is still going to continue to the downside. This is just an expanding structure, so price just expanded something like so, giving us a new structure which still points to the downside. So in the coming week, price is probably going to, impulse downwards, gives me a correction. This is what I'll be looking for in the coming week. All right, set a sell stop order with a 20 or 30 pips depending on how wide the correction is, something like so, and then I'll be targeting all the way to this point down here. All right, if my management is good enough, then I'll be making at least 12% from this. But let's see how this goes. All right, guys, so this is the summary or the trade recap for the week between 21st of November to 25th of November 2022. I hope you got value from this trade. This is exactly how easy it is with my strategy. I just look for specific things. If I don't find those things, no trades. If I find them, perfect, I take trades. But if I don't find them, no trades. All right, if you like videos like this, do well to subscribe to my YouTube channel. Smash the like button so YouTube will recommend this video to as many people that need to see these videos. All right, please comment in the comment section. Tell me exactly the type of videos you want me to create for you. Tell me if you like videos like this so I can create more of them. But basically, this for me is more of documenting my process. So I'm going to be doing these videos every week to document the trades I took for the week and the results I got for the week. So in this week, if I do the calculation, I would say yes, I was profitable. So let's do a quick calculation. Let's do a quick calculation here to see how much profit I made from this week. All right, so in percentage now. All right, so I risked 4%, I made 4%. I risked 6%, I made 45%. So minus 8%, there's two losses. This 4% already strikes out this 4%. So if I take away 4 from 45%, it means I would have been profitable with a 41% profit margin. All right, so which was a perfect week for me, a perfect week. So I made 41% this week, 41% in 1 week, which was crazy, crazy. But of course, that was possible because I was risking 6%. All right, so it's not like I made 41% in one move. That's not the case. I over-risked in that trade. So, but you get the point. So the actual win for me, if you want to count percentage-wise, would be, let's look at this properly, would be 1%. All right, 1%, 7%, which is 8% minus 2%, so 6%. I won 6%, which is still decent on any large trade account. Okay, all right, thank you so much, guys, for your time. I hope you enjoyed this video. Once again, do well to smash the like button and subscribe to my YouTube channel. I'll see you on the next one. Peace.